Now that we have all the introduction stuff out of the way, let's hop right in. But before I even get to the strategy itself, I want to first just kind of take a broad look at the market and a broad look at just a breakout and analyzing the breakout in and of itself. So I think this is very important to do. So that's why, I want to do this early on in the course. So the reason being I find this so important is by understanding the breakout and how it transpires, it's going to give you ease of mind when you're understanding and executing the strategy. So like I make note, it may sound kind of mean or ruthless, but when you do understand the emotions that are occurring around you, and you understand all those dynamics, how people are feeling, how people are reacting, all that good stuff, you can use that for profitable opportunities. And I don't think manipulate is the right word, but when you understand what's going on and others do not understand what's going on, that does give you a big advantage. And as is more likely times than not, you're going to know what's going on because you're sitting here listening to this right now. Most people are cheapskates and would never, they would refuse to invest in their education. So they're going to be the ones who, quite frankly, are getting used and abused out there. And that's why I don't have much pity for them, because there's opportunities available, not just through my stuff, but through many other means. And they just choose to, whether it be cheapskates or they don't want to put in the hard work. And, to those that aren't going to, put in the hard work, they're going to be the types that are going to be in these stages of emotion that we're going to be looking to take advantage of. So with that, we're going to look at, in this video, the psychological states of emotion and money. When you have emotion and money combined, there's all sorts of stages that a person's psyche goes through. So this is going to be more of a psychological video than anything else. We're going to look at 3 case studies of these psychological stages and how they all work in conjunction to form predictable overall price movements. Keyword there being overall. I'm not saying it happens the same exact way every single time, but as you'll see, the overall structure of it, it happens every time, because at the end of the day, all charts are doing and all we are doing is measuring emotions. Then we're going to just end the video with where we can find our volcanoes and where we should be looking to avoid, because there's just no reason to think that there's going to be a volcano, any sort of breakout action there. And then this comic over here, I guess it kind of pertains, but you always complain that I don't know how to show my emotions, so I made these signs. And that's what a chart is. A chart is the way that the market shows its emotions. And again, going back to the point I already touched on, you're listening to this right now, so you're investing into your education. You clearly believe in charts, and so you're going to be able to interpret those signs from the market, how people are feeling, and like I said, as ruthless as it may sound, you're going to be able to use that to your advantage, while other people are, just getting taken advantage of and used because they're running around like a chicken with their head cut off. So the very first psychological stage that a market goes through is confusion and worry. This is where the price action had been favorable, so things have been going in the bull's direction, and then all of a sudden the price is now falling. It's starting to fail to make new highs, and this is all due to the fact of, short traders are building their positions, so that's going to create resistance in and of itself. Long traders, those who are disciplined, are starting to be stopped out. They're saying, all right, it's looking like things are, the tide is turning, so my stop loss has been violated, so I'm out. And these 2 items are going to be what starts to create downwards movement and a trend. Now, again, if people don't recognize charts, they're going to have no idea what's going on. They're the ones sitting there going, what's going on? What's happening? Why is this occurring? Blah, blah, blah. Well, they're not using the chart, and they're not seeing, okay, well, the price is up near resistances, or the price has formed resistances, which is telling us that the tide is turning. Now, for the majority of traders who are not professionals, or haven't invested into their education, like I've been harping on, they're confused. And, because, again, going back to that first slide, when we're talking about money is one of the ultimate, when you stop and think about it, probably money and family, money and, I can't think of anything that would influence your emotions as much as your own personal finances, and then family, maybe a career, but, at the core of it, money is going to have a big reaction or a big implication on how you feel. So, with that being the case, so when you combine that with the fact that they're uneducated and don't know what's going on, then that just sets up for a disaster. And that's why a lot of people are losing money in the market. So after this psychological stage, now we reach the panic point, and this is where the price action begins to drop at a much faster pace. previous stage, it was just failing to make higher highs, starting to maybe bump its head, maybe like a double top, went up and just couldn't push through a resistance. But now, the mood has changed and the price starts to change much faster. The talking heads on TVs, blogs, message boards, etc., they're all proclaiming that the end of the world is here. This company, the sector, the market's gonna, everything's going down the tubes. The Fed made a decision. I mean, just turn on CNBC, Bloomberg, Fox Business News, any of those. They're all going to be, things are terrible, all that, blah, blah, blah. And now at this point, to add on to all that, you have the momentum short traders that are starting to, pile into the stock. And then you have undisciplined short traders that really begin. They're the ones that are late to the party. Now, the disciplined shorts are the ones that were building those positions up towards the top and kind of halfway down. But at this point, they see the panic. So the undisciplined shorts are just like, hey, I'm gonna form a short position too. Just like if a stock is breaking out, the people that are buying at the top, those are the undisciplined people. They're trying to pile in way too late into the move, and that's the same thing that's going on during the panic emotion of this cycle. And then finally, the longs that have been in the stock, they get out their white flag and they surrender. The emotional stage of just accepting defeat and saying, you know what, I am done. This in the technical chart world is known as capitulation. The surrender is just a flat out way of saying things have capitulated. This is where the inexperienced, uneducated traders finally decide to kind of bite the bullet, and they can't take any more pain. This is where the disciplined short traders are now covering, which means they're buying back their position. So short traders are now buying because they know, okay, things are getting a little bit too overextended here to the downside. Big money begins moving back into the stock. So remember, the smart traders is where follow the big money, and the big money is what controls the market. So when the big money starts to come in and buy, think about what that's going to do from the charting perspective. It's going to start to form support levels. You're going to see some bottoming out action. So that's when they're starting to move back into it. The inexperienced and uneducated short traders continue to short, and this will help us later on. So remember, the inexperienced, they're out there shorting, and they shouldn't be shorting at this point. And this is going to come back and bite them, as we'll soon see. And now the price action starts to level out, and those bottom signal candlestick formations start to form. Hopefully you've all gone through robotic trading, so you know what I'm talking about there. But at this point of the surrender, we start to see some favorable, candlestick patterns and just overall price action movement. Now we transition into one of the more of the psychological stages that we care about. And that is the hope stage. And the hope is now where the price begins to show some signs of life. Now, during this period, there's not a reversal going on, but it does symbolize that there's a chance of a full-blown move to the upside. Again, this is, during the hopeful portion, it's not saying that there's a reversal going on, but at least the stock is no longer getting hammered down or anything like that. And remember, people have surrendered now, so that's going to change the whole dynamic of the price action. Being those disciplined short traders are continuing to cover because they understand that things are starting to transition into the bull's favor. So maybe they're covering for short losses, maybe their stop losses are getting taken out. But the point being, they recognize that things are starting to turn, and they are now covering their shorts and possibly even now taking a long position in the stock because they're covering shorts and now going long into it. That very well could be happening. That big money, they continue to accumulate. They're nibbling on those shares. So from a price action perspective, you're going to continue to see that sideways movement. And then we get back to the experienced and uneducated short traders. They continue to short because they think this is just a dead cat bounce. So they see it starting to show some upward signs, but because they have no idea what's going on, they're just, hey, no, this isn't real. This isn't real. This is just a dead cat bounce. I'm going to average up. Whereas going from the long side, we would average down. A short trader is going to average up. So they're sitting there shorting more and more because, this isn't real. This isn't real. And again, that'll come back and help us here pretty darn quick, as we'll see. And then bounce traders, they're trading the stock. They're in and out. So they're kind of neutral to the stock. They could be shorting it up and down a little bit. But for the most part, they're just kind of a neutrality within this portion because they recognize, hey, there is some hope. So there's going to be some bounces, and hopefully that'll maybe turn into a bigger one for them. But point being, they're really not affecting the stock because at the end of the day, the big money's up there accumulating, so the stock's not really going to go any further down. And then we reach the excitement stage. people surrendered, then people got hopeful, and now there is excitement. And this is where volcano trading is all about. This is where the breakouts happen, and this is this is where our strategy goes into full-blown effect here. The price is now showing true signs of life. Keywords being those true signs. They're pushing through key resistances. These are, remember, the resistances that are created by short traders and bounce traders locking in profits. So when it gets through those, then that implies that the demand for shares at those levels is well beyond all of that. Big money becomes much more aggressive in buying, so they're going to continue to push the price up. And then right here, those short traders in specific, those undisciplined ones, are now being forced to buy back at higher prices. And they're going to be, because they're buying, they're just like anybody else buying, they're going to be pushing the price back upwards. And then we have the talking heads on the TVs, blogs, message boards. They start to talk positively about it. So, back in the panic stage, it was, the end of the world is here. And now all of a sudden, the mood has changed in the headlines to, hey, things aren't so bad. They're turning around. It's looking pretty good. So you have, the headlines in the magazines and all that. The tide starts to turn just from a talking head perspective. And of course, all this creates excitement, and that's what we want. We want to feed on the emotions of excitement. That's what we're looking to do. We want to understand, okay, these other stages have taken place. Now things are turning. Now people are getting excited. So let's hop on board that bandwagon, the excitement train, and let's ride that for a while. And then we reach the losing touch with reality psychological stage. And this is where the price is, at the all-time highs, 52-week highs, whatever. The point being, the price is just very overextended. And this is the talking heads on all those blogs, message boards, etc. are proclaiming, hey, this is the greatest thing since sliced bread, a can't miss, life changer. You've heard it. I mean, if you hang around in message boards or chat rooms, I'm sure you've heard people just sit there and say, this is my retirement stock. I'm never going to have to work again. The claims become just unreasonable and quite frankly, funny when you understand what's going on. It's like, come on, do you really believe that? But it happens every single time. And anybody that's been like myself who hang out on message boards, I mean, you see it time and time again. It never disappoints. There's always going to be people there that think it's the best thing ever. And this is where, when people are thinking it's the best thing ever, the big money is locking in their profits. And then some of them, when they're smart, they not only lock in their profits, but then they take the other side of the trade and start to short. So, they lock in those long profits and then think, what? This thing is just so far overextended. I like the chance that it's going to roll over. So they, form that short position, and that in and of itself starts to form those resistance levels. The disciplined short traders begin building positions. So if not necessarily big money, but just disciplined short traders, they understand what's going on. So they're going to start building a position. And once again, that's going to start to create some resistance levels. And this is at the point where undisciplined short traders surrender. So they're just, I've had enough, no more pain. The price is going up. Maybe they're getting margin calls on there from their broker. But point being, undisciplined short traders, they're waving the white flag and they're out. And then this is where the undisciplined people start to become worried and confused again. And then that cycle of emotion starts all over again. So this is the final stage, because remember, when we started it off, we were talking about how resistances start to form. It can't get through certain levels, and then people start to become worried and confused, because at this point, everybody thought it was supposed to be the greatest thing since sliced bread. Then all of a sudden, why isn't the price going up anymore? Why isn't it putting in new highs? And we start all over again. So now let's take a look at some examples. And what I want to just drive home is this does not pertain to anything in specific. In this, we're going to look at a stock, an actual stock. Then we're going to look at just a sector. So not a stock or the overall market, but a specific sector. And then we're going to look at the actual Dow Jones during a portion. So the point being, it's psychology. It's price and emotions being combined. And like I've been harping on, when that's happening, it's a recipe for predictable overall price movement. So let's just look at Microsoft stock here. So here we had big move, big move, big move. Okay, greatest thing ever. And then here we go. Starts to form some resistance, starts to pull back here. Confusion and worry, hey, what the heck's going on? Why isn't this action going on anymore? So you had that confusion worry stage. And then right here, panic, freak out mode, talking heads. This is over, this is over. This is a cruel joke right here. Gives them a little bit of hope and then just completely goes. So this is pretty much the backbreaker here. They had some hope, comes down, and then you know what? That is it. I am done. They all start to wave the white flag, and then all of a sudden, look what happens. We have higher lows start to build. You have some green candles. So now all of a sudden, people are getting a little hopeful. Again, this doesn't mean it's a reversal or anything like that, because you always need confirmation. Perfect example being right here. This could have been a little miniature hope point, but the disciplined understand that hope is not anything that needs to be. You don't load the boat on hope. You got to wait for confirmation, which never came there. But you do have hope during this state. And then all of a sudden, right here, where we enter into things, excitement. This is where the breakout happens. This is where the volcano really starts to explode, and you get this nice upward price movement. And then we have the predictable, where things just get way, way overbought. Everybody is way too excited, and that just leads into greed, and greed leads to people losing touch with reality, and it just, those smart people big money starts to lock in profits, maybe start to form a short position. The smart disciplined shorts start to sell, but you understand. And then all of a sudden we have fails to put in a new high. So there's the lower high and confusion. And then here we go. The whole process starts all over once again. Now here up here again, to drive home that point, we were looking at a sector, not a stock, not a market, but just a sector. So here we are looking at the oil sector, and again you have something that's been going up, and then all of a sudden starts to head back down. So you have some worry that's going on, and why is this going on? And then all of a sudden, right here, things just get nasty again, and this turns into the panic. The world is over. The price, just little sideways consolidation, which never had any sort of confirmation. That was kind of the backbreaker. People thought it maybe had been, evening out, which it might have been, but never got any confirmation. So from a psychological point, that's it. I'm panicking. What's going on? And then here, all right, that's it. Surrender, which is, I didn't notice this at first, but if you look, so here we had a close and it gapped up. So then people are thinking, they're feeling pretty good. Hey, we had a gap up. That's great. This thing's getting ready to turn. And then look at this. It gaps down the next day, and then look at this candle, drops all the way down here. So you can just imagine the emotion. The day before you had a gap up, and it hung green. It's not like it was a solid green candle or anything, but nonetheless still a gap up. And then the very next day, gaps down, and then at one point during the day. So can you imagine just all the people that finally just waved the white flag right here? Totally makes sense. That's why I love candlesticks and charts. The emotion here, it's just that's a cruel joke that the market played on these poor people down here, to gap up like that, give them some hope, and then just crush down here. And then talk about cruelty. And I'm just noticing this. I didn't but look at this. After that, the next day, it gaps up and runs. A gap and run after. That's, you almost feel bad for people after something like that. That's just that's brutal. That should almost be illegal there. That's all you can really do is laugh, because, and then you look at that, and then another gap up. So those people that surrendered, oh man, they're seeing on this day here, and then literally 3 days later, the price has risen up this much. So it's one of those things where the emotions, I can understand why. If you're in a bad state and you're hoping that this was going to hold, and then it doesn't, and you panic, and then you had the gap up, so that your last kind of breath of possible hope, and then it gaps down and then just tanks. So for the people that sold down there, oh man. But anyways, I'm kind of getting off topic, but it's pretty amazing when you just think about the story and how people are feeling during this action. Anyways, here, so you have the gap up, starts to pull back, and now you're getting some more green. This green is taking place up here instead of down here. So okay, working on putting in a higher low. That's going to give people some hope. That's what we want. And then we go through this whole stage right here of excitement. So that's, again, where we're looking to the strategy to exploit. And then, as always, hey, oil is the greatest thing ever. Oil is going to keep skyrocketing up. You have all the fundamental stories out there, all the the Middle East. They're not going to give us any, so that's going to shoot prices higher. Just all that garbage. And then of course the professionals, they say, oh, look at that spinning top candle up there. Oh, look at that massive red candle. That looks like some sort of downwards confirmation. And of course, these people over here, they don't know that. So when all this action starts to happen, we get down here, and they are once again confused and worried. What's going on? I thought the Middle East was gonna, tighten up production. What's going on? So and the cycle starts once again back to square one. Now here we are looking at the market. So again, not a stock, not a sector. We're looking at an actual market, and this happens to be the Dow Jones. And I just wanted to illustrate this, that this isn't just a one-time thing. I mean, here's a Dow Jones. There's no Photoshop, or there's no magical tricks going on. This is literally a portion of the Dow Jones chart. And I'm going to go a little bit faster through this since you're getting the point. But here we'll just start with losing touch with reality. So people thought, oh, this is great, this is great. Then once again, like I said, look at that. Previous highs struggled to form, and new resistances are formed. So those short traders, that big money starting to build those positions. Price starts to fall through, go down. People, hey, what the heck's going on? And then you have, these just bloodbath days here. People are panicking, and then wave that white flag down here. And the market, once again, is a cruel thing. Imagine how those people feel. And then 3 days later, the market's all the way up here. When it pulls back, you can see putting in some higher lows. Okay, we have some hope. And then we go on this nice run here. That is excitement. And then we reach the cycle all over again. Up here, hey, the market's breaking out. It's ready to go to new highs. Look at this, blah, blah, blah. And then starts to roll back over. People, again, hey, what's going on? I thought the market was supposed to be going to new highs. They get confused. They get worried. And then it starts to really fall apart. And they're starting to panic. What's going on? The end of the world is here. They get a little, small little hope before it just rolls back over here. And from an emotional standpoint, that is it. I'm done. And then as soon as they get out, starts to bottom out here, starts to head back upwards. So, hey, there's some hope. It maybe is some sort of upwards movement coming. And then sure enough, here is that upwards movement. Here's the excitement, the breakout, the volcano that is erupting. That's what we want to see. That's what we want to exploit. And then all of a sudden, looking back here, just from a technical perspective, price gets right up close to this previous high. So you can better believe the professionals are looking at charts and at least know that. So, and while all the talking heads are proclaiming, hey, everything's great, we know that, hey, wait a second, why is it's up towards previous highs? Probably a good area to lock in profits, potentially make a short. And, so when people are losing touch with reality, and then all of a sudden starts to roll back over, hey, what the heck's going on? Everybody said this was awesome. Gets down here, starting to panic, what's going on? Panic. Go down here with this red day. Then all of a sudden, right there, get that spinning top, a big monster move there. Hey, there's some hope here. What's going on? And then you start to get this upwards price movement once again. And then, that'll eventually lead to people losing touch with reality. So I'm not going to say a short amount of time, but it happened, just 3 cycles right in a row here on the Dow Jones. So emotions are very predictable when you factor in money, and that's what we want to see. So as we go through the course, what zone are we looking to trade in? What psychological stage do we want? And as I summarize up here, hope plus excitement equals those volcanoes, those breakouts. That's what we want to see. And I know, and I personally trade in this zone once in a while. That is the surrender zone, where you're looking to play a bounce strategy. But this course and this strategy is not about bounces. We're not looking to try to catch a falling knife. We're not looking to try to time a bottom. This is not a bottom bouncer. We want to see these other stages. We need to first see some hope, and then when we see the excitement, that's when we're going to make our move. So again, this is the area we want to avoid. We are not looking to play bounces. We are not looking to try to catch a falling knife or anything over here. Some people do that, and some people do it very well. I myself, I have the trampoline trading bounce strategy, but that's not what we're talking about. We're in a different area of the psychological zone here. We need to see some hope first, and then we need some excitement to confirm that, which is what brings us to when we start to implement, all our buying and all that stuff. So again, the strategy, or the zone psychological stage we're looking for is going to be during the hope and then excitement stage, and that's what the whole course is going to be about. What we need to use to identify hope, what we need to use to identify excitement, and then how we can act upon that. So hopefully you have a great idea now of just the psychological nature of the market, and where we're going to be looking to exploit these emotions for ourselves.